It's December on MyStockscanner Live. Markets are shifting, sentiment is changing, and opportunities are wrapping themselves in year-end momentum. Let's see who shines today. And remember to share this show with your friends. It's free and full of great information and tips for everyone from the seasoned investor to the beginner. So share or tag your friends so they can benefit as well. Liam Flavel and Hans-Henrik Nielsen are doling out answers to my questions and maybe even your question if you write us on FOMO at mystockscanner.com. And Liam, we have a question here from Leif Larsen in the V. Let's start it off with that. He wants to know a little technical thing. What does CAGR stand for? And you better tell also where do we find it?
CAGR, it's on the system a few times. I'll show it in when we go into one of the playbook screens later. It stands for compound annual growth rate. It's a really magic number because it's all about compound interest. And effectively, if you want to get to 100%, a lot of people think you just need a 10% return for 10 years. So that's up to 100%. You don't, because one year you do 10%, the next year you do 11%, the next year, et cetera, et cetera. So you actually only need just about 7 years to get to 100% growth with 10% a year. That's compound annual growth rate.
See right there, you learned something. I did for sure. So let's see if we can keep that up. I have my doubts because now I'm going to go to Hans Henrik. But no, it's Friday. Come on, dig it out a little. In your morning scan, that's published 5 days a week, just before 9 a.m. in the morning, US is naturally one of the focus points because they are sort of the focus of all macroeconomics. But you're worried about Japan at the moment.
Oh,
Tell why.
extremely. Well, there's a ton of reasons, but basically they are overloaded on debt. They are putting some stimulus packages out. They are raising their interest rates. And if someone out there thinking, what does that have to do with us? Basically everything. They can pull the rug completely under our economy here. We are writing about that basically all day long, or at least a couple of times a week for our members. So Japan is under focused in the Danish media, I think.
Well, we try to help out on that and tell about it. So please remember to check out the market scan every morning before 9 a.m. A lot of valuable information. It is a Friday, which means that we roll out the Friday face off where we pit two stocks against each other and see who's best. Today, one of our members of our Facebook group and our platform have chosen that we should take a look at ABB from Sweden and asked to have it compared to Schneider I was going to say electricity, but that's because they're from France. I was trying to put that in there. Will it be blue and yellow, or will it be le tricolore? Pure Storage was down by 27% a couple of days ago, but it bounced yesterday. We'll see if it's a buy the dip situation. And also European car brands were in the fast lane yesterday. Is the optimism back in gear, and is it investable? We'll tell you. In China, they have a couple of new chip flavors that they want to serve up for us. Maybe they can rival Nvidia. We shall see. Baidu is being put forward as one of them. But is it also our flavor in the 3-point playbook? We'll give you the answer. And also the answer to what number of the day is. It's 502%. But let's get into gear right here and take a look at something that Hans-Henrik takes a look at every morning. We're looking at some macro news. Hans-Henrik, US futures are steady. I take a look at them now. Yeah. And they're steady ahead of some numbers that we are going to get today. And it seems like the Danish press is super excited because PCE inflation numbers are coming, but you're saying not so fast.
Yeah, well, PCE, there are two different inflation numbers coming out of USA. One is called CPI, Consumer Price Index, and the other is called PCE, which right now I can't remember what it stands for. But there are two different ways to calculate inflation. Today, we are going to see the PCE numbers here. But the thing is, they're from September. Because of the shutdown that were back in October, we're not getting the numbers there. So the numbers we are getting today, well, they would have been important to get in October. But in December, it's kind of a bit like a liter of milk that has expired 3 months ago. So we can see the direction, and that is one thing people will look for today. That has been trending upwards. The PCE is the one Fed normally looks at. That is the important thing for them. And if we just very quickly look at interest rates, and I know this gets really boring, but these are the long-term interest rates in US, 20 and 30 years. They're pointing a bit upwards right now. That could indicate the market thinks inflation will actually go up. But let's see what happens.
And next week, we do have interesting numbers for sure, because we'll get the rate decision for Fed. We'll talk more about that later in the show. But let's get something current and not sour milk from Hans-Henrik, because a couple of days ago, Pure Storage kind of just took a nosedive and went down by 27%. Yesterday, it bounced back a little bit. We got up to about, I think it was 5 or 6% up. Liam, that sounds to me like a buy the dip situation. Is it?
It's by the quality, so that's what we're going to look at. Let's just flip over to what the stock actually did. We talked about it on Wednesday, was it? I think it was.
Yep.
So only 2 days ago, and I said then, really, really good quality company, and we'll flip through that and the playbook analysis very quickly. But what happened was, you can see it here, big drop down of 25.87% actually, and then a green day yesterday. The market didn't really like Pure Storage's guidance going forward, so it thought the gross margins and the margins generally were being squeezed, which meant that even though Pure Storage were making the money, that wouldn't necessarily translate into profits quite as well as it has done in the past. So that's a lot of the time when these stocks are really up high and they're priced for perfection, you need to have that stellar result going forward and the stellar guidance from the company saying we're going to make even more money. Otherwise, you see drops like this. It's a really good example. I said on Wednesday, it looks like a great company. We wouldn't buy it right now, and the reason for that was we don't buy into earnings. If earnings are within 2 weeks or so, we won't even touch them because of times like this.
Liam, can I call out? There's a pattern when I look at the screen right now. If I look to the left, the last time when they bounced somewhere, it was up. It was green all the way to the left. And
Yep.
now we have the red one. It looks like almost a chair or a bed that you can lay in. Shouldn't it shoot up from there? That's the bottom right there.
It could do. It could go sideways and it could go down. That's about as much as we know about this. So, but this is, it's actually a serious point, because what we're not doing is necessarily betting on this. What we're trying to do is skew the odds in our favor so that when we think it's going to go up, it doesn't go down too much. So, we are down here at the bottom, so that's not a bad thing. But it really depends how the market reacts. Now, the magic formula for this is that we've got our MTI indicators here. They basically spot whether a stock is in a momentum trend or not, and it's going up for us. It flipped on red yesterday as soon as the stock dropped down. So that's telling us over the last few weeks, it's only been in green for a few days. The weekly version of it, which is exactly the same, it just uses weekly data, has been in green for a while, but it's going to tip over to red if the price doesn't shoot up appreciably today. So everything's going to be double red. For us, that's enough to stay out of it. Also, we've got the 50-day, this green line, 50-day moving average is sort of what tells us whether the stock is in the trend that we like to follow. If it's below, we don't buy. If it's above, it's another signal that yes, we could buy. But just very quickly on a playbook, just going over the dashboard again, it's a quality company. It's got green across the board. So these are the 12 or 15 metrics that we look at for what a quality stock, well, what makes a quality stock. So, and we will go through that a little bit more later in the show. You can see that also it's got a pretty good percentage upside as well at some stage. We won't get in at the bottom. It will probably rise about 10% above its moving averages, and then we'll start looking at it and see if it's an interesting pick or not.
It definitely sounds like we're looking for a U-turn at one point, and we stay in that vocabulary or that word because there was a U-turn in the market yesterday for Porsche, for Daimler Truck Group, for Mercedes, and even BMW took a U-turn, went up by 4.5% amongst others. Stellantis, of course, also up. Hans-Henrik, time to get into European cars, and now I'm talking to the stock, not the car itself.
Oh yeah, well, what happened was that Trump, and he had announced that this was actually expected and has been expected for a while. So yeah, the stocks are going up, and that might be because people are saying they have a hard time believing everything that comes from Trump, so they want to see some action. But now it actually seems like what he's doing is making it easier to sell just normal gasoline cars on the U.S. market. And before people start to yelling at Trump and say he's anti-environment and all sorts of stuff, we should notice that EU is actually thinking about doing the same, simply because that would give the old car manufacturers like Ford, like BMW, like Volkswagen, a bit more time to transfer into the electrification. So what basically happened, if we just look at BMW, this has, as it can almost be seen here, there's a good old saying: so, when it's in the press, it's in the price. So that means that it has already been priced in here. So people have been expecting this for a while, and with BMW, we can see some really good movement. The good question is, would we have been in a stock like that? And if we just have a very quick look at it here in our playbook, we can see that BMW has a terrible quality score. Already here, we can see, not that interesting. There can be some explanations here, but then look at the earnings per share that have been going down, maybe stabilizing a bit, but this is not what we want to see. Same with the revenue, absolutely not what we want to see. Return on capital employed, they're getting worse and worse at actually making a yield on their money. It's not that they're not stable. We can see that on the so-called current ratio and how well they can pay the interest rates. But already here, Liam and I would look at each other in 30 seconds and say, no, thank you. Also, when we look at the value chart, we don't like this value channel, as we call it, or a PE channel. We don't like that to go sideways. That tells us that there's not much growth in their earnings. We like that to go up towards the right. That also gives us what is called a margin of safety. We can be more wrong and still make money. So basically, I picked BMW, but the other car manufacturers are actually not that much different. We are not really into that right now, to be honest. It's not stocks that we are looking to buy.
And as you say, it's done with safety. So put on your safety belts. It's Friday, and Friday on this show means something. A face-off is on the menu thanks to Lars Due Arnold, who wrote us on our platform on Facebook and suggested a stock matchup between ABB and Schneider. He says, well, they're both kind of similar, but of course different. And I know that you guys talk before the show and you get to decide who goes with what. I'm interested in seeing here because the choices are Swedish or French. Tough one for you, Liam. I know that. Will you do the honor and tell us who takes what?
Liam, will you start out with Schneider?
I will start out with Schneider. Let me just get my screen up. Right, Schneider. Energy management and other industrial automation business. So it's not that sexy, it's not that interesting, but it makes a lot of money for the company and for ABB as well. So you can see we've got a brief description. So this is our playbook page, where our dashboard that we look at and decide within 30 seconds pretty much whether a stock is good or not to carry on investigating into. And we can start off with the first question, which is this a quality stock? Because we only want to buy quality stocks. We don't want to buy absolute rubbish, because it might go up, but it could also go down by a huge amount very, very quickly, as we see with sort of stocks all over the place. Shape Robotics is an interesting sort of example of that recently. Also, if things do go wrong in the market or anything, quality stocks should hold up a little bit better. So they're a bit more protectionary for us. We can see here that our simple quality score 93 out of 100. That's made up about 15 or 16 different underlying metrics about the company. And that tells us immediately, yeah, we're interested. 93 is huge out of 100. You've got earnings per share, which are going up very, very steadily. So that's an awesome sight to see. And also the continuing version of that, which is basically pretty much the same. It's slightly different. It's where a company maybe divests part of their some of their divisions or something like that, or has a one-off, and that's what the continuing tells us. The PEG ratio tells us how much of that the growth is priced into the stock price already based on what the analysts expect. And we like to see that below 2.5. And at 2, that's absolutely fine. It shows there's a bit of growth in the stock for us. So those 3 key metrics, the quality score, the earnings, and the PEG ratio, are enough to tell me I'm really interested in the stock. Everything looks really, really rosy for Schneider. The return on capital, the return on equity, and invested capital, great. The company makes pretty much the most free cash flow that it does, and free cash flow is generally cash coming into the company that it can either invest itself into, it can return it to stockholders in dividends, or buybacks and increase the share price. So that's pretty good as well. The current ratio is okay at 1.14, and the interest coverage, their debt metrics that tell us whether the company's debt is spiraling out of control. So everything looks really, really good. So we move on to number 2, and I'll just flip to the valuation chart very quickly on there. We can see, if I just sort of reposition some of these, if I put the green up to the recent top, and maybe drop it down a bit so it's halfway between the sort of the most recent tops, and the red is pretty much perfect at the bottoms there. So what I'm doing is I'm setting my worst case scenario, which is this red line where you can see the price has dipped over, and this is basically the earnings per share multiplied by the PE ratio that we're setting. And the same with the green line, our best case scenario, where the stock could go to in a perfect world, up here, which matches some of the peaks going backwards, might even squeeze it down a little bit more. And then the blue line is what we think is going to happen. And actually, normally, if you're not too sure, put it in the middle, or put it somewhere where it bisects where the price is going in the direction. So we can see here we've got a best case scenario of 40%. We've got what we think is going to happen is about 18.5%, which is pretty close to the analysts, and we've got a drop of 15%. That makes this a marginal call, because we like to see, if this is at 15%, we like to see this at 30%, so we get a 2-to-1 risk reward ratio. So we're stacking the odds in our favour again on on the company, and whether we're going to make money on it, and not lose too much as we go through. And then very finally, the third question is now a good time to buy? We talked about this earlier on. We've got the MTIs. The daily has just gone into green, but the weekly is stubbornly just sticky into red. We're below the 50-day moving average. The stock's not really going anywhere. We'd want to see this go up, maybe retest the green line again, and then go up again, and these two to be green, and that would be interesting for us. But at the moment, we wouldn't actually buy this stock.
See, that was the answer from Irish Liam on a French stock. I can hear that the energy almost left Schneider at the same time. Maybe because it was a French stock. He also took a lot of time here, Hans-Henrik. You don't have much time with AB.
No, I know. I don't need that, because we are setting them up towards each other. And if you look at ABB, just it looks like good quality, and it kind of is. But in the 19, 20, 22, there were some drops in earnings. We don't like that instability. They're not growing their revenue quite as quickly. And we can see here, both on the free cash flow and on the other return on capital numbers, it has been a bit all over the place. So just holding them up together, we would choose Schneider. Looking at the value chart, we can see here that there are some quite distinct bottoms and tops in here. So we're placing the value chart here. That gives us about minus 15, 17% to the downside, and it only gives us a couple of percent to the upside. That is an automatic, absolutely no-go. So if we were to pick one of them, it would be Schneider.
S'il vous plaît. So we know that the French beat out the Swedish here, and we don't take any pride in that here in Denmark at all. We are absolutely neutral when it comes to that.
Completely.
Yeah, and let me serve up some chips. Just because not because it's Friday and the bar is open, but just because in China they think they're starting to feel that they have a chance to take up the competition with Nvidia. Liam, Baidu is venturing into the chips industry, and China like their chances.
It's been there for a while. It's owned one of its subsidiary. It makes a chip. I'm not even sure I can pronounce it properly. Begins with K, Camel Run or something like that. Just looking at Baidu very quickly, it's got a quality score of 70, but the earnings have been all over the place, and the earnings are under pressure, both from their normal business, which is delivery of stuff, food, items that people order, and so on and so forth, and also because the amount they've been putting into chips. The chips themselves, they're sort of at the forefront on China tech. They're trying to sort of brute force, just throw a load of electricity and a load of chips at the solution to actually train and answer questions on their AI. The technology is at 7 nanometer, which is pretty small, but NVIDIA's technology is at 2 nanometer, so it's much smaller. So one chip can hold many more capacitors and transistors in there, and circuitry generally. So the capacity of these chips is huge compared to it, and that's where China is struggling to keep up. Until they can duplicate what ASML do in making these chips, then it's they're going to be behind, but they can throw lots and lots of resource at this to make it work, which they seem to be saying they can.
And Liam, since we are not saying that Baidu is not our flavor, you basically said that right here. But today on the Chinese stock exchange, something popped. That's the number of the day, 502%. That was the chip maker that they call more threats out there. It was an IPO of 1.1 billion US dollars. Talk about entering the room with a bang. Is that the chip maker that we should put our chips in?
It's difficult. I mean, it's a good day at the office for more, and they've been around for a little while. This is their IPO that they're going for. It's a difficult one. There's a big frenzy. We are in a bubble in AI. Everyone's trying to sort of beat everyone else to this, and we see chips massively gone up in the last few years in the US and the Western world. The same is now starting to happen in China. The Chinese government are not really allowing Chinese tech companies to use Western chips. They're saying we have to build our own infrastructure, or potentially make some moves on Taiwan and take over TSM, Taiwan Semiconductors. That would be the obvious route if they were interested in that sort of approach. But yeah, so it's an interesting one. Lots of very interesting chip companies.
We shall see. Future will tell us. And talking about the far future, which this was regarding, let's turn our attention to the near future. Wednesday, the 10th of December. It might not be Maria Lucia or 12 days of Christmas or what have you, but it's close, especially in the financial industry, because this man steps up to the microphone on Wednesday and he's going to tell us what the Fed's decided. We have said this many times already, Hans-Henrik. Isn't it already decided? Isn't it going to be a rate cut?
Well, you can Google what is called FOMC countdown. In there, we see this strange graph, but it basically shows what the market overall is pricing in of probabilities. And right now, it's about a 90% probability for one rate cut, and one rate cut is 0.25%. So that is what is most likely right now, with the job numbers, job cut, layoffs, and all that have come out the last couple of days. I think that is reasonable to think. And then they don't think there'll be a cut for a couple of meetings. I will be following it closely. The interesting thing is people think Fed will lower the rates, but the market rates are going up. That means the markets say, yeah, we don't really believe you, Fed. We think there's a lot of uncertainty in the market.
As you said, we will be live with that, as you always are, Hans-Henrik. You're always commenting live on that, and we will, of course, do that on our platform as well. Earnings next week, also a couple of interesting things. We're going to get something from Aero Environmental. That's the stock in the US. That's on Tuesday. But Wednesday, we get to your neck of the woods, Liam, when it comes to specialty. We get Oracle, Adobe Synopsys, and on Thursday, we get Broadcom. Talk about some heavyweights here in the tech area. What excites you about next week? Is there anything you're going to look particularly for?
Yeah, Oracle, very interesting. They did the deal with OpenAI. Their share price shot up by 35% and then very quickly shot down by 35-40%. So that'll be interesting to see that whether their money worries are actually serious or not. That's what that's going to give us a bit more. Broadcom are making specialist chips for other people out there, and they're really making big inroads potentially into the NVIDIA space with clients and building that their new ASICs, they're called, the chips that they use. So they're going to be the two interesting for me. Adobe, never really liked, so. And I
Okay.
lost money on it every time I've invested in it.
I thought feelings didn't play into sort of the way that we are investing, but a little bit here.
Only on some.
Okay, we're definitely getting ready to wrap up the show, and we will be back on Monday. That will be with the 3-point playbook. But before we go, Hans-Henrik, I know on Sunday you always do your Sunday wrap. Have you started to look at sort of topics that you might touch up upon?
I will definitely dive a bit more into the Japan issue, because that has a potential of basically rock the entire Western financial world. And we will also be talking a bit about Powell, the Fed interest rate, the new Fed leader that is terrible if they pick the one, I think. So I'll do a bit of debating with myself about that.
And you can read that
probably
on, or
lose.
rather see that on a video on Sunday, the Sunday wrap that's out every Sunday. So keep yourself updated. Do ask questions. Maybe Hans-Henrik will take them up on the show as well in Sunday wrap, FOMO@MyStockscanner.com. And then we have a little pre-present for our viewers, in that sense that we, from next Wednesday, that is going to be on the 10th, are going to do the show in Danish, and we're going to broadcast every day at noon, 5 days a week. We're going to do it in Danish, and then on Tuesdays and Thursdays, starting from Thursday next week, we're going to see Liam at 1:00, and we'll do a show in English Tuesdays and Thursdays. So that's a pre-Christmas present for our viewers and members. For now, there's just left to say that we wish you guys the best of luck on the markets today. Happy investing. We'll see you on Monday. Have a great weekend, guys.